we want to choose the two best equity sentiment indicators, I would say the put-call ratio and the VIX. For the put-call ratio, it's simply the ratio of puts relative to the calls. So intuitively, it's negatively correlated to the equity market because the puts are the right to sell while the calls are the right to buy. The way we use these are two extremes. I mean, the whole premise of sentiment analysis is through it's through statistical extreme. Sorry. So if you have a statistical bullish extreme, we can say that it's already too much, and we can reverse, and vice versa. So, for example, if you have a high put call ratio, we know that we might see a bottom on the S&P 500. So what we can do is that we can calculate these statistical extremes using basic descriptive stats such as volatility through standard deviation, and we can monitor these levels to find out the bottoms and the tops on the S&P 500. So as for the VIX, we can use the either the divergence method or the spike method. The spike method is a bit more subjective. In a way, we say that we had a recent high spike that is higher than the most recent one. So we say that we probably seen a bottom. But personally, I prefer the divergent method, which is exactly like in technical analysis, where you use, for example, the RSI divergence for prices. But here, knowing that the VIX is negatively correlated, if they do the same movement, that's a divergence. So if the stock market is doing lower lows while the VIX is doing lower lows, then we have a divergence, and we might see a move. So we might see a contrarian move on the S&P 500. Personally, I prefer the put-call ratio, but the VIX's divergence is extremely strong.